For the first time in decades, the data is screaming that something is breaking again. Inflation is still running hot. Job growth is collapsing. And yet, stocks, crypto, and housing are all near record highs. It feels impossible. But that's exactly what's happening. We're living through a new kind of economic storm, a stagflationary slowdown, where prices keep rising, even as the real economy weakens. And the last time this happened, it triggered one of the biggest resets in modern history. Let's start with something unusual happening right now. Consumer confidence in the stock market is near 20-year highs, but confidence in personal finances is near Great Recession lows. That's right. Americans are more optimistic about Wall Street than ever before, while feeling more hopeless about their own wallets than they have in decades. In other words, the financial economy and the real economy are moving in opposite directions. And when that happens, it's usually a warning sign that something deeper is about to break. Here's the data that explains why people feel poorer, even when markets are booming. Since 2010, real personal income, that's income adjusted for inflation, has barely risen 45%. Meanwhile, the S&P 500, even after adjusting for inflation, has gained over 280%. So, while stockholders and asset owners have seen record growth, workers' paychecks haven't kept up. And that gap is widening again in 2025. After a brief boost in 2021 to 2022, wage growth has slowed sharply, while inflation in essentials like rent, food, and healthcare continues to eat away at real earnings. This disconnect is what economists call a wealth illusion. People see their 401ks or crypto portfolios growing, but their day-to-day life feels harder than ever. This is what makes the current moment so dangerous. Inflation in the US is hovering around 2.9%, but core inflation, the stuff that actually matters, like housing, insurance, and medical care, is still running closer to 4%. At the same time, the job market has cracked. The latest data shows unemployment rising above 3.5%, the highest since the pandemic years. Job openings have dropped sharply, and layoffs are climbing in tech, retail, and manufacturing. Normally, when jobs weaken, inflation falls. But this time, both are happening together. That's stagflation, and it's poison for the economy. The Federal Reserve is stuck. Cut rates, and inflation surges again. Keep rates high, and the job market keeps breaking. Either way, the middle class gets squeezed. Now, let's talk about something that's quietly vanished: personal savings. In the 1980s, Americans saved around 12 to 13% of their income. Today, that number has fallen below 4%, one of the lowest in history. Meanwhile, corporate profits are sitting near record highs, over 11% of GDP. That means companies are thriving, but workers are running out of cash. This imbalance is feeding a dangerous loop. People borrow more just to survive, fueling short-term consumption, but destroying long-term stability. When you combine low savings, high inflation, and rising debt, it creates the conditions for, yes, another economic reset. Look around. Stocks are near record highs. Gold crossed $3,900 an ounce, its highest level ever. Bitcoin trades above $100,000, driven by ETF inflows and fear of currency debasement. And housing? Still unaffordable for most Americans, with prices nearly 2 times higher than pre-pandemic levels. So how can all this coexist with weak growth and high inflation? Simple. Liquidity. The financial system is still flooded with cheap money created during the pandemic years, and much of it never left the market. The result? Asset bubbles floating above a fragile real economy. And history tells us, bubbles always pop. This brings us to the uncomfortable truth: a reset is coming. It might not happen overnight, but the math doesn't lie. You can't have assets compounding at 15% a year while real incomes stagnate forever. Something has to give. Either incomes rise or asset prices fall. In the 1930s, it was a crash. In the 1970s, it was inflation and high interest rates. In the 2020s, it could be a combination of both. If taxes rise, corporate profits shrink. If inflation sticks, purchasing power collapses. Either way, the wealth gap that has exploded over the last 20 years will eventually rebalance, and history shows that process is never painless. So, what does this mean for you and me? It means the age of easy money is over. Building wealth now requires being smarter, not just richer. That means understanding how inflation eats real returns, how assets move in cycles, and how to protect yourself when the financial system hits reset again. Because this time, it's not just numbers on a chart. It's our savings, our jobs, our future. And the next decade will belong to those who see the reset coming and prepare for it now.